the stock market morning prep video for Thursday, June 12th. We did get a little bit of red across the board. Dow Jones was really the most that actually we sold off of. We were down about 102 on the Dow. Nasdaq down only 6. S&P down only 6, almost 7 points, and a Russell down 6. So a lot of the major indices really held in very, very well. The Dow Jones looked like it was selling off a little bit more, but we actually made a little bit of a lull mid-morning, maybe early afternoon, and then we just kind of grinded higher. So we really didn't get too much movement onto the downside, which obviously portrays as more bullish than ever. However, we are getting some movement. We do have some political tensions escalating in Iraq, which has now spiked the July crude oil future up to about 105.95, which is in front of your screen here, up almost 1.5%. Does that mean anything? Well, in the eyes of a money manager or trader, it really should. Has it of late? No. Nobody really cares about anything other than buying stocks. However, if this does escalate further and we start getting, they're requesting airstrikes from the U.S. to help out, and if that happens, I think oil goes higher, and that dampers the U.S. recovery to a degree. Why? Well, crude oil, if oil gets below $100 a barrel, goes into the low 90s, that's an automatic stimulus package for the U.S., right? Because there's money that is being saved on gas, and people like to spend. And on top of that, they go out. They go out to eat. They go to the mall. They go see their friends and family, and they spend. And that creates movement in the economy. But when oil spikes and gasoline rises, most Americans say, well, we're not going to go and take that staycation down the shore and spend. We're not going to go see grandma that's 75 miles away because it's a little too expensive, and they stay local, and that means that the money is now locked up in their pockets in their banks, and so that does put a damper eventually. Does it happen today, tomorrow? No, not at all. But one thing that you have to, when you see that large spike up, it's a psychological issue. And this could very well be a catalyst that what the markets are looking for, to have an excuse to sell the market, quote unquote. But we don't know, but we need to be diligent enough and watch what happens and pay attention what happens in Iraq, because it does affect our markets, okay? But as you can see here, in crude oil, I do have a nice ascending triangle, okay, that we just broke out of. And on the short term, I put a couple of Fibonacci retracements, and I wanted to show you. I did a small low to high here, this current low, and we got a 1272 extension and a 1618, which now that'll be the short-term targets. But what I also did was I went up to back in September, where we spiked up to 112 to the swing low here of 91.27, and I got our bigger targets, which here is 78.6% retracement, and of course the larger targets, which we like to look for, the 1272 extension, will come up to about 118. Now, if that happens, you will definitely see an effect in U.S. equities, no question about it, if we were to rise that high. Right now, it's not too much of anything, but it would be a little bit of a shocker if crude oil starts to continue to rise, and we have escalated tensions in Iraq, and then all of a sudden the U.S. has to go back and help out via airstrikes, or maybe put some ground troops back in there. That would not be a positive at all for the markets. But right now, it is what it is, and we just want to be patient and kind of watch what's going on. Now, bonds actually hit the 1272 extension, as you all know. Next target would be the 1618, which is the target for the inverted head and shoulders of bonds, as we mentioned many weeks ago. And as you can see here, in the short term, the RSI is oversold, so I am looking for a bounce back up. And again, with escalated tensions in Iraq, I think money would flow back into bonds, and even gold for that matter. All right, so we just want to keep this in mind here. Take a look at equities. We're at the 1618 extension, and this all coincides nicely with where the equity markets are pricing right now. I mean, equity markets are totally fairly valued. And we are at major double extensions. This is a perfectly logical spot for the markets to pull back. And what are we looking for as far as a pullback? I'm probably looking for the 200-day moving average, which is 1888, and the extreme would be the lower end of this trend line support of 1863, if that were even to happen. You break the 20, you probably go to the 50, which would be a round lot number of 1900. And I think that's really where the markets would pull back, and that'll be about 5%. We've had 5% pullbacks pretty much. We haven't seen a 10% pullback in well over 2 years. So that's what I'm looking for, logical spots for pullbacks. Okay, take a look at the hourly, and what I did on the hourly, I did a low to high Fibonacci tracement, and I am looking for the short pullback, the short term, the very short term, because it's an hourly. 61.8 would be that golden ratio, which would be 1895 to 1906. So that kind of coincides nicely with the daily chart. So that's really what I'm looking for. And then we would reevaluate. Okay, diamonds here, weakest of the five, a pullback. But again, I don't put a lot of weight on the diamonds. More likely, I like to look at the transports Qs, of course, and the ES. Now, transports are getting even more interesting, and I mentioned that I said this move here is totally unsustainable. And what I mean by that is that when you have a price moving away from the 8 even, that's a little crazy and a little bit out of whack, so to speak, with pricing and where we are with the charts. As you can see, we're way over the top. We just hit our upper end of the trend line. So the logical spot would be, the first pullback would be the 144.18, and then of course that 34, 142.22, then a 50, and then of course the lower trend line, which I'm just going to bring right over there. And that's the extreme. But again, with oil prices rising, you will see an effect on the transportation sector, and that is one of my favorites that I'm going to be looking to short in the coming days and weeks, if again the transports start to get going. Now, we really didn't have much movement here, as you can see. We had put in a doji, we put in another reversal candle, and now we're just putting in a spinning top basically on an 8. So not much, but you can see the volume is increasing as distribution continues. So this is a good sign that the transports want to go lower. And if they do want to go lower, they are our ultimate leader of the 5 indices that we follow. So therefore, it should hold a lot of clout for equity prices to go lower. But again, this is all in theory right now, so we need to see price tell us what to do. Okay, IWMs, 61.8% retracement. We're there now. This is a logical spot for a pullback, and let's see if we can get to that 20-day moving average of 113. And then again, of course, we will reevaluate. We took out bearish symmetry here. Now we're looking for higher prices, which we did get. We had that bull flag that we identified, and now we're just sitting on this area here. So this is the spot where it's either going to start to break back higher or break lower. So let's keep an eye on IWMs as well. And lastly is the Qs. Really didn't do much of anything yesterday. Hold up very well. A lot of the high beta names held up well. Amazon got upgraded. You had your Apple that was still moving. LinkedIn did okay. Netflix did well. So that kind of buoyed the Qs, and that's why we didn't get any movement at all on the Qs. Down very little. So let's see what happens today and tomorrow, guys. Tomorrow it would be even more, because hold a lot more clout. We're going into a weekend, so I was interested to see if they're going to sell this market. If not, going into next week. But I am just about confident that we're going to see some big movement in the equities in the next few days and the coming weeks. Okay, be safe out there. Use your stops, and we'll speak to you tomorrow. Take care.